Thanks for tuning in for our market update for the month of June. I hope all of you survived and found a nice cool spot during this heat wave that we've had. David, how did the investment markets perform in the month of June?
Overall, June was a really good month for the equity markets, Harry. In the United States, we saw really strong returns with the S&P 500 up a little over 4% for the month of June. In Canada, things were a little bit slower, but still positive. The S&P TSX was up a little bit over 1%. And meanwhile, in Europe and Asia, that was the only sort of soft spot. The European and Asian markets broadly were down about 1.5% for the month. But overall, for client portfolios, most people were making money because our portfolios are certainly overweight to the US and Canada as opposed to Europe. So those two markets performed well. So a lot of client portfolios were up in June. Harry, what helped drive such strong returns for US equity markets in June?
Good question, David. We had excellent growth in the U.S. market. I mean, we've just been seeing positive numbers right across the board. U.S. hiring was just excellent. It's the best it's been in the last 10 months. Non-farming payroll grew by over 850,000 people to go in there. So again, the U.S. corporations are finding people to be able to go back to work, which is an excellent number. Manufacturing, I'm going to read this number because it's a little more technical. The manufacturing activity was quite strong, well above the boom bust levels, suggesting a 61.2 reading on the ISM. Again, in layman terms, that just means it was really good. And the VIX index, which is a really popular index to track sort of volatility, its reading was at 20. So again, well below these things, which again, in non-technical terms, just means the number was excellent. So overall, everything's just been really, really good, extremely strong. Companies are able to find enough workers, which is a really important thing. So overall, just excellent numbers, David. Did the expectations for inflation change at all in June?
Expectations for inflation have changed, I think, a little bit as of June. Up until this point, and for the past year, we've seen a lot of shortages in supply of goods due to the pandemic. The recovery in economic activity has spurred greater demand for things like semiconductor chips, cars, and a host of other industrial materials. So we have seen inflation really perk up over the past year. The expectation for 2021 is now 3.3% inflation globally. So that's certainly a higher number than we've seen for a number of years, but it's by no means extraordinary. It is certainly elevated, but I think that that's going to start to abate a little bit here. So far, suppliers of goods should be able to catch their breath because consumption is going to start to wane. People will be doing less spending on hard goods, and they'll be, as the economy is reopening, going out to restaurants and engaging in buying services more so than goods. So that should help. Labor shortages have also been a big problem, particularly in the United States. But as, again, vaccinations have unfolded and people have been returning back to work, that's going to be less of an issue moving forward. So we expect that trend will broaden. We're starting to see that in Canada too. With the vaccination program unfolding here in Canada, we're starting to catch up to our neighbors to the south, and we expect to see big gains in the labor, or sort of the leisure and hospitality sectors. We should see lots of growth with job gains. So the bottom line is that some inflation relief is likely forthcoming. Again, we've got commodity price gains are slowing, demand for goods is moderating, and the supply of labor is set to improve. So, lower inflation expectations, hopefully over the course of the next year, coupled with continued really strong expectations for corporate earnings, should be a good thing for equity markets moving forward for the second half of 2021.
Thanks, David. And as always, if you have any questions, want to review, update your financial plan, please don't hesitate to give David or myself a call. Take care.
Bye for now.